Welcome back to the 6-5 podcast. It is my favorite thing to do for the week. We are slinging it all over the place. And back by popular demand, we have Stacy Rasgon. Stacy, how are you doing, my friend?
I'm good, thank you. How are you?
Good. Good. Dan, how you doing? You look like you've had a couple hours of corporate meetings. I know how much you like those.
Yeah, look, I start late and I make up for it by leaving early. That's how I do things at the office. But yeah, I mean, look, we've got an exciting guest on the show today, and I'm glad that you even introduced him before me. I think my goal of replacing myself on the show is even closer. So next week it's going to be Dan's out, Stacy's in. Then in 2 weeks,
There we go, baby. Hey,
the invite's going to be off my Friday calendar, and I'm going to come on and I'm going to be like, it's Pat and Stacy.
Yeah, we're going to go. I just read left to right, Dan. I'm not technically autistic, but some people tell me that I am. Anyways, with that said, it's great. Let's fire this thing up. A little disclaimer here. Dan and Pat are not equity analysts. We are technology industry analysts. We are not professionals. We are not certified or trained. Stacy is, though. Stacy, real quick blurb. You're famous, infamous in some circles. If you wouldn't mind introducing yourself, who you work for, and what you do, that'd be great.
You bet. So my name is I'm Stacy Rasgon. I work for a company called Bernstein Research, where I cover the U.S. semiconductor and semiconductor capital equipment space, the equities. Some background. Again, so I've been here for 16 years. I was actually at McKinsey before this. I worked 100% of my time then in their semiconductor practice, and I served clients all over the value chain and all over the world. Before that, I did a PhD in chemical engineering at MIT, where I actually built semiconductor manufacturing equipment. I did some work at IBM, TJ Watson, research in their advanced lithography and processes group. And so it's kind of been an interesting sort of random walk from there to here, but it seems to be working out so far.
Yeah, appreciate you being on the show. We're going to talk about surprise earnings. We're going to talk Intel, Qualcomm, AMD, ARM, Lattice Semi, Microsoft, and Amazon. We are the 6-5, but we're actually the 7-5 this week, because how can you not talk Amazon? I mean, sure, we could have squeaked Apple in there, but we do have our limits. So let's jump in here. Intel, wow, my phone was lighting up. I'm getting DM'd. I think I got 27 LinkedIn invitations from people at Intel. I mean, I got 42 new followers. I mean, it was crazy next. But here's the net, and we're going to throw the red meat into the room and we can discuss it. But good quarter, lousy forecast.
It wasn't a good quarter. No.
Well, they met revenue. How about that?
Sort of. Okay. Yes.
Yeah. Net. Boils down to confidence at this point. There's a lot we don't know, and we'll try to get info on. Details about Oregon to Ireland transition, Meteor Lake. What changed to drive the 15% layoff numbers? Like literally changed between last quarter and this quarter. What could be the downstream impact from the layoffs?
I'll let Stacy go first.
Yeah, okay. I was just going to get my blurb out. And
no. What I was going to say though, Pat, is by the way, you can go first, then Stacy, I'll go last. I just wanted to laugh because I said something on Twitter, and I said something along the lines of had a less than ideal quarter. Was like how I tried to be nice about it, and I got someone that said, "Is that like the understatement of a lifetime that you said that?" Because it's like, I'm already sad. Like I think, Stacey, you said in the green room, like, I'm sad. It's like, I'm sad. Like, how do I say this without saying this?
Yeah, I'm sorry, Dan. This was supposed to be your lead in too. I just got so excited ahead of myself. I'm sorry.
No, it's okay. Go ahead, Pat. Finish your run, because you were on a nice run. But it was less than ideal for me.
I mean, in the end, what can we take to the bank now that the company says that? And listen, I'm talking to their customers, their customers now. So, Stacy, the floor is yours.
You bet. So it was a less than ideal quarter for sure. So the quarter itself, you're right. It missed the consensus, but they had actually lowered their number early in the quarter because they lost their export license to Huawei. And the street numbers on revenue didn't quite fully incorporate that. So you could argue the revenue they did about 12.8 billion, was kind of in line with that. The gross margins were very, very bad. They printed 38%. So we're back with a 3 handle on them. And you got to remember that happened a little while ago, but really the last time that the gross margins had a 3 of them, I was in elementary school. It was 1986 was the last time. So it's been a long time. They were 500 basis points below on that. They printed 2 cents. I think the street was at 8 or 10 cents expectations. So the quarter wasn't good. And if not the best quarter for Q2. Q3, the guidance was horrendous. So they guided about $1.5 billion below the street on revenue. Gross margins, again, they guided like 38. It was like 750 basis points below the street. They guided to a 3-cent loss. It's nasty. And they even sort of gave some color into Q4. Q4 is like, I don't know, another massive miss versus where people. So those things are really, really bad. There's a few reasons for it. I mean, one is I just think the original guidance, they'd said last quarter that they'd get like, double, they'd get like, above seasonal growth through the back half. They had this like little hockey stick for whatever reason embedded in the numbers. So that's clearly not happening. There's some PC like CPU inventory channel flush. This is something I've been concerned of. We track this, pretty religiously, and we saw that, through the COVID swing, we had a big overshipment and then an undershipment. And I know in Q4 and in Q1, as far as I can tell, like the PC CPUs were back to overshipping by a pretty wide margin. So I've been a little worried about channel, and that's flushing out in the back half. And so that there's some degradation on revenue there. Look, I think they're still losing share. You can kind of look at what's implied for their like data center growth versus say what their competitors are putting up, and they're clearly losing share. So on the revenue side, it's not good. And then the margins are really horrible. And that's really where I think a lot of the deep concerns are going on. They're attributing this to a mix. They're ramping a new product for AI PCs called Meteor Lake. And the early parts are made in Oregon, and then they would typically transition those over to their other fabs, in this case, Ireland. And they made a decision, their claim is they made a decision to make that shift early. And they said what that does is it saves them $1 billion in CapEx. So they think it's good. And maybe it's the right decision. But the issue is early in the ramp, the costs are really bad. And, so it's massively impacting the margins into Q2 and Q3. And then I also think even as those costs come down, just the cost of that part is lower. Or, I'm sorry, the margin of that part is lower. The cost is higher. A lot of it's outsourced to TSMC, a lot of the tiles. As that becomes a bigger piece of the mix, I think that impacts. And then they gave kind of color for next year. Margins are still going to be really impaired. I bet street numbers came down by 500 or 600 basis points for gross margins next year. And that's the Lunar Lake ramp.
Yeah.
Which again, they're very bullish on, but Lunar Lake is entirely made at TSMC. And so again,
that's right.
Are really bad. So it was not good. And so in response, they're taking action. So there were some news stories in the days before that they were prepping a pretty big RIF, and they are. So they're laying off 15% of their employees. If I just take the Intel specific employees, that'd be about over 17,000 employees. So they're cutting OpEx. They're cutting CapEx this year. And although it's hard to say because I think the street CapEx numbers for Intel were already lower, but versus their plan, they're cutting fairly significant amounts of CapEx. They also suspended their dividend.
Yeah. They
had cut their dividend by 2/3 a year and a half ago, and they've fully suspended it now. So they're kind of in scramble mode right now, in survival mode, to try to right the ship. And then there's 2 other things that are going on, and these were already happening, but I think they're accelerating. They are getting subsidies from the government. There's the investment tax credit, and then eventually the CHIPS Act stuff. And then they're also getting what they're calling partner contributions. What they've been doing is they've been selling parts of some of their factories effectively to private equity. They sold half of the Arizona fab that they're currently building to Brookfield. That one's not operational yet. And then this quarter, they sold half of their Ireland fab, this Fab 34, to Apollo for $11 billion. They got that cash in Q2. Now they have to give up returns. They said that's going to cost them. It's like $700 million next year that they're going to have to give up, right, to Apollo. Apollo doesn't work for free, right? But they have cash coming in, right? And so that's what's going. But I mean, in general, it was a horrendous quarter. And then the issues that you kind of look at, so it's down, I don't know, 27%. I'm probably off by 20 minutes on this feed, but it's down a lot. And I think the issue people are wrestling is like, how do you even value it? There's no real earnings, there's no free cash flow, and there may or may not be any terminal value, right? That's the question that people are having now. So It's going to struggle to fly to the floor right now. I think all the funds that held it, like in the dividend funds, it had a small dividend. I mean, they're probably going to have to sell. Like it's a mess. It's a real mess.
Dan, what do you got, buddy?
Look, I know this is Stacy. This is a mix, like you said, of being sad and sort of a victory lap because you've probably been. God, I'm sort of being sardonic about it because you've been sort of one of the more notable bears that just has not come around. And some of us, I mean, look, I admit when I get things right. In fact, I'm the first to always say it. And I also have to sometimes be the one to acknowledge when I get things wrong. And there's some things I've gotten wrong here. I mean, I think on some of the parts, like I think we kind of said about executing the say-do ratio thing that Pat likes to talk about. He's done a lot of things, but it just hasn't worked yet. It just hasn't worked in the numbers. I mean, the process, the getting things to market, the tape-ins, all the things that he sort of said would happen have happened. It just isn't panning out. I mean, they're raising money, they're leveraging assets, they're shedding business units. This is like a GE story. This looks like a little bit like what GE started doing when, and it's like, when do you get to the minimum viable product where the market's gonna be like, this is where you've
I mean, that's it. That's exact. So I mean, they're spinning hope, right? It's like, oh, we've got Lunar Lake, like it's a great part, supposedly they say, but the cost structure is not good. But then when we get to Panther Lake, which kind of launches, second half of 25, so it's kind of 2026 for volume. That's where it's actually on 18A, that's finally the process that they're saying is really good. And we're going to bring all those tiles back from TSMC, and so we'll be making them internally on our better, at that point, hopefully we'll have a better cost structure, right? And and so the margins will get better. So that's the hope. But I mean, even if you believe it, I mean, it's 2024 right now. That's a long time to wait. And we may have talked about this last time. I can't remember, but they had that Foundry Day a little while back, and they were talking about, we're sort of splitting the economics of the different parts of the business, and we're trying to incentivize like better behavior, better choices, and transparency. And those are all very good things. They need to do that. But I think I said last time, my biggest takeaway from that day was come back in 2030.
I was gonna say is I got three quick bullets, and then we got to move because we probably could spend the whole show on. Go ahead, Stacey. Go ahead.
I just want to say there was one silver lining from last night. I maybe it's in your bullets, but I do want to say, like, and I was talking to Pat in the green room. Like I'm having sort of, initially I was having sort of reminiscences of like AMD back in like 2014, where I mean the investment controversy at that time for AMD was, are they going to go bankrupt or not? And I think if this was a different scenario, if we didn't have the CHIPS Act and all these partner contributions, we'd be having like going concern conversations. I think Intel will live. I don't know what kind of a life it will be, but I think they'll live for. And the reason is, if you sort of add up everything they're doing, you add up the cost cuts, you add up the capex cuts, the other cost savings, you add in the cash that they're saving from not paying the dividend, and you add in all the subsidies and these partner contributions, it's like $40 billion of cash, incremental cash on their balance sheet over the next like 2 years. It's probably 45 or 50 billion over the next 3 years that they would not have had. So that will, I think, save them from like, they will live. So that's the one silver light. But the problem is, I don't know what kind of a life it's going to be.
Dan, what are your three bullets, buddy?
So I'll make them real quick because we've got some more positive earnings to talk about now that we can all wipe our tears and keep going. But the bullet one is the Gaudi thing has to be done. They have to get it right. They have to land. And that one, what I'm saying though, like, look, you cannot be relevant if you cannot get an AI processor for the data center in
$500 million this year. Who cares?
No, well, that's my point. Like, so I'm not talking about now. I'm talking about like at some point that thing has to get competitive.
Well, like what? No, it's not Gaudi. So they're talking Falcon Shores, which is the next one.
That's too far out.
Well,
like, literally, I know. I'm just finishing my thoughts though. Like, they got to execute with what they have, because you cannot survive this. You're right. Like, I've actually said, I think I said to somebody, like, there's just no thesis right now to go in now. The only thesis is basically extraordinary value with a 10-year horizon. That's the only thesis I can really think of. The second thing though is, they do have the wins and designs on AI PC. Whether or not it's super profitable, they need to saturate the market and show they can protect their market share. That's the second item. And the third is, the world does need a strong Intel. The TSMC dependency is scary. When you actually break down how much we depend on Taiwan for everything,
I mean, I'll say something, and maybe it's controversial, I don't know, but like this whole CHIPS Act thing, like picking Intel as the national champion, like I understand politically why that happened, but I mean, to be fair, if we really wanted to get a ton of leading edge capacity built here in the US, we probably should have given all the money to TSMC and encouraged
Totally should have.
to build
Totally
as
should
many
have.
fabs as they could have made it as easy as possible.
But the thing is, they had to pick a U.S. company. That was the only way to do
I
it.
understand.
And second of all, and I'll actually say something controversial back to you, Stacy, is they did not. They picked them in sort of in words, but with the money they gave out, they weren't as nearly as clear that they were picking Intel. They gave almost as much money to Samsung, Micron, and to TSMC as they did to Intel. So they kind of said, blah, 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 Intel. But the money, they kind of said, we're not as confident as we maybe were articulating we are.
Well,
All right, guys, let's move. We got to move.
Pat's the keeper. Pat says go, we go.
My final word on this is this brought up more questions than answers, but I'm going to be doing my channel checks, and I've already got people phoning it in to give me information. So let's go into the next topic, and that is Qualcomm. Beat raise. Diversification story here with automotive. Automotive is a juggernaut. Nothing really on PCs. Said that it exceeded internal expectations, which were appropriate, low, and some SKUs were sold out. But it's a very small percentage. But I do believe the roadmap looks good, and I think even looking at OEMs after the Intel news, maybe they're doing a side eye at Qualcomm. Any impact from any potential AI lift is going to be through this new Orion core that'll be announced later this year. Won't financially impact this year, but if AI and smartphones is going to hit in any year, it's going to be 2025. And if we see what Apple is doing with Apple AI, it is a good portending thing. I think China will actually be leading with the AI smartphone, which I think, again, there's a lot of puts and takes for Qualcomm in China. You've got Huawei rising, you have Apple potentially declining, but you've got premium smartphones in China going up that does benefit Qualcomm because you get the APU, you get the modem, and you get a lot more RF content. Go.
So Qualcomm was a good print. The stock reaction was very interesting, though. It was up like 8% in the aftermarket, and then it was like down, and then it's been weak since. And there were a couple of reasons. So the quarter was good. It was a nice, solid beat and raise. The guide on the surface was a beat, and people were worried because, again, they also lost their Huawei export license. So there were two reasons of the stock sell. The first was that guide actually had an extra week in the quarter, and so you get extra revenue and everything. And I think it was misunderstood how much revenue it was, because if you just do it at first glance, it's 8% of a quarter's revenue. They guided 9.9 billion. If you just take a uniform revenue distribution, the real guide without the week would have been 9.2, which was very low. They said some stuff on the call. You could actually back that out. It wasn't that much. It was like $300 million, about $100 million in licensing, $200 million in chips. 9.6 was, in my opinion, was the sort of normalized guide, which would have been fine. The other issue, though, is they've made a practice of the last couple of quarters to kind of give like N+1 guidance, to guide not just the next quarter, but give some soft guidance to the quarter beyond. And they kind of guided the December quarter softly, but a little below where the street was. And so that's kind of what they tend to do this. Again, maybe they should stop. But if you sort of look at their prior history, when they eventually get to that quarter, not only do they tend to beat their guide, they also tend to beat where consensus had been before they gave the guide. So I think they're being conservative. I think it was fine, but I mean, that was the issue. There's the other issues that Qualcomm is having is everybody's worried about the Apple modem. It's potentially going away. They've actually told everybody for modeling purposes, assume it goes away. People have assumed that's end of 26, but there's been some news flow that they might lose some small volume SKUs next year potentially, as Apple kind of trials their modem. And I don't think it's not a lot of earnings. I don't think that the worry there is there. The worry would be that, does it increase the chance that the actual thing actually does go away, like for real? Because people are thinking that maybe it won't. So it's been disappointing. Now at these price levels, I think you're already pricing Apple out. I could take all of Apple out like next year fully, and it's like trading in the teens today. So
yeah.
Like, I think you're kind of pricing it in, but that's the worry that people have. It's like, well, they're guiding down December. I got these Apple headwinds, maybe there's no rush. That's kind of where I think sentiment in the near to medium term will be it just ignoring all the other stuff that's going on, like with the macro and everything right now. I think that's just where sentiment is. But in general, it was a decent print. Like, it was very good. They're on the product roadmap and everything. They're killing it. And you mentioned auto, by the way. Like, the adjacency stories looking really good. Like, the auto killed it. Auto was really good. I think their long-term targets there are looking increasingly conservative. At least their industrial IoT business has bottomed, and then we'll see what PCs do. I mean, worst case, it's not a negative for them. Right?
Yeah.
So we'll see if ARM PCs are a thing. I don't know yet, but if they are, they'll benefit.
Yeah. So you guys hit on a lot of the points. I think you and I, Pat, have been beating the diversification drum, and this is where it's starting to really shine. I mean, look, the handset business it was fine, but I mean, all their growth came in strength in automotive and strength in IoT, which are now, they've had these two additional automotive is almost $1 billion a quarter now of revenue.
Yeah, they 811 million they did.
Yeah, 800 something, but I mean, it's 75% roughly up from a year ago. So it is changing the whole trajectory and the whole shape of the company. So now it's got the potential of these ARM PCs, which, when we talked, we all probably talked to Christian. I know you and I did, Pat. I talked to him, and, I thought, I kind of said, like, I'd like to hear more about how it's going. Kind of the way they explained how it's going was a little vague, like, it's better than we had modeled. Okay, well, good. I'm glad to hear that. But what does that really mean? Are people buying these? Are they flying off the shelf? I mean, our testing in our lab shows that there's some really great stuff. Pat, you and I both use them every day.
Yeah.
I've been encouraged by my experience with them, but is this a super cycle? I mean, we keep hearing that term, like there's going to be a super cycle. Well,
I hate that term.
I know. Some people love it. But the point is, like, what does that mean? And when does it ramp? How excited are people? What value are they getting? You and I have both complained about the Microsoft recall thing not necessarily being there, and that was the exciting feature. So that's a big one for me. I mean, then we were hearing about, by the way, a super cycle on the handsets, right? There's going to be a super cycle driven by Apple Intelligence, and it's going to make everybody run to the store. And I know you're cringing, but just, I'm not saying I agree. I'm saying that's the sort of the street, the bulls of the street are saying.
Where I get bullish, by the way, on the AI smartphone side is actually not tons of units and upgrades, like it's content.
Yeah.
That's
okay.
actually where I'm very, and I think that's enough, frankly. And if we get an upgrade cycle, great. Like, that'd be wonderful.
So it's more people willing to pay more for, the things they're using on the device. Of course. And look, I'm gonna be really clear. AI is not XR, and not to say actually Qualcomm, part of their strong IoT number was XR, which is rare. And anybody's making money on the VR XR side, but they actually do well because the Meta new headsets are performing well. But where I'm getting at is, like, AI is a real thing. The biggest thing across the entire industry, though, that I think people are fighting with is what AI are people willing to pay for, and what AI are people just expecting as part of what would be kind of an iterative upgrade. And that could be in software, that could be in hardware, that could be in enterprise, that could be in consumer. It's like, if people pay more for SaaS, I'm supposed to get the next feature. That's part of why I subscribe to your stuff. How much more am I going to pay for it? Same thing with a phone. Like, every time I go buy a phone, it's supposed to have more stuff. That's why I upgrade. I mean, by the way, I'm still using a 13 Pro Max because I've seen nothing in the last 2 generations that excites me enough to pay for another phone. And I'm a tech guy. So, that's what we're up against. But Qualcomm's numbers, I mean, look, compared to where we started this conversation.
Oh yeah.
Steady state, good stuff, margin, operations, management, execution, not a lot to complain about over there. Diversification looking good.
Excellent. And let's dive into AMD. Dan, I'm gonna keep I'm gonna give you the microphone on this one. I keep being the hog. No,
it's okay. It's okay. I'll say a couple things on this one because I'm interested and intrigued on hearing everyone's. Like, this was sort of, I think my comment when AMD hit was, I said, finally a print that the street likes. Like, there was finally a print that, it was the same day, I think, as Microsoft went, and everybody was just throwing up on Microsoft. But it was all, it was all about CapEx. Now, Satya got on the call. We'll talk about Satya later, and he kind of recovered a lot of the ground over the course of his call. But AMD, 2 numbers. So Intel had a 9% growth in client, and AMD grew like 5 times faster in client. So market share gains there, strength in their numbers there. The data center number was huge, and we all know why that is. It's instinct. I mean, NVIDIA is the champion, undisputed, but there is a number two, and the number two in the GPU space is AMD. And so AMD, while there's still kind of some questions on ROCm, questions on the software stack, are people going to use this? There is demand for this, and whether it's been some of these AI clouds that are building up around it, whether it's some of these what I would call the hedges that are being made by the hyperscale cloud providers, not the AI cloud, not the Lambda Lab kind of things, but the actual AI cloud. So the AWSs and the Microsoft, which is where a lot of the AMD is supposed to land. They need an alternative. They really do. The tom-toms on the streets that I'm hearing is, look, everybody knows they have to be beholden to NVIDIA in many ways. And it's the champion, undisputed on the product, on the software, on the stack, on the libraries. Having said that, they're all feeling a little bit of the pinch, the margin control, the deal flow, that they just don't have enough control. And so AMD is a very logical second choice. There's a solid roadmap. Can I say I hate the nomenclature? I hate the 325 and 50 and my mind cannot wrap around those numbers. But there's a roadmap. There's clarity of a cadence. So in the data center, there's an absolute strength there. The growth is there. The numbers are there. The margins are there. The customers seem to be there. And there's no one else. Your point about the 500 million, our market forecast shows about the same thing. 300 million last year, about 500 million on Gaudi this year. And so AMD's got that momentum, and no one else is there to compete with it. So the trajectory they're showing and they're on is good. So a lot to like. I won't even touch gaming. That's been pretty beat up. But that has more to do with where's that industry go? Where's that going longer term? So I'm going to pass the mic here. Those are kind of my initial comments.
You bet. So AMD's quarter was decent. I will say, the stock was about 140 when they printed it, and it was up after the print. I think if it had been at 180, which is where it was 3 or 4 weeks ago, I think it would have been down. But it wasn't a bad print. So the expectations have come down. I think on the good side for them, they're clearly still doing well in their kind of core client and data center businesses. They're still clearly taking share, and those were all good. And again, they did take their AI guidance up. They went from quote unquote more than 4 billion for the year to 4.5. Again, I think 3 or 4 weeks ago, 4.5 would not have been enough. I think where things are now, 4.5 at the time at least was enough. So that was all fine. The negatives, and there were a few, would be, look, on the PC side, again, they are significantly over-delivering versus Intel. Intel's calling out channel flush. Again, I've been worried about that. I am worried that AMD's guidance, both their results as well as their guidance, they're guiding for above seasonal growth for client in the back half on new products. There may be some incremental channel fill that may be incorporated into that guide. I don't know yet. It sort of depends on the share interplay, but it's something to watch, I think. I'd say the non-core is the embedded business and gaming are quite bad still. Embedded's kind of bottomed, but the recovery isn't as good as they thought. And so numbers next year actually had to come down because of that, as well as their OpEx going up. Although I'm not going to knock them for OpEx again. Compare and contrast with Intel, I think it's probably good to spend right now if you can. And then finally on the AI guide, the 4.5 billion. Yeah, people believe it's higher than that. And you have to believe it's higher because if it's 4.5, we already know what they did in Q2. You can kind of ballpark what they're sort of suggesting for Q3. It doesn't leave much room for an exit rate in Q4. So you need to believe it's higher. And it puts more pressure on the expectations for next year because I still think again, after the bloodbath late, I don't know. But expectations were for them to do solidly double digits in AI revenues, and so double-digit billion in AI revenues next year. So you need a good exit rate coming out of this year. So those are the things I think to watch. But objectively, again, and by the in this set of guides, we've had a lot of semi-prints so far. There haven't been a lot of good ones. This was more on the better side of the spectrum of what we've seen, I would say, so far during the season.
Yeah, good analysis, guys. And I guess it's interesting. In December, I said that their AI number would be 6 billion. Just kind of looking at the puts and the takes.
I don't think I could be wrong, but I feel like if it was going to be 6, they could have said that they would do more than 5.
See, that's not Lisa though. That is not the way that Lisa Su rolls. I think the way that she wants
before, so I don't know, but you know her better than I do, probably.
Well, it's just I look at look at the itty bitty numbers that came out. And it's this trickle in the way that they want to do that they want to bring that out. I mean, we went from a number in December to January, and then end of Q.
Yeah.
So, anyways, that's kind of where, I mean, again, I don't get paid to hit the exact number, but calling that, it seemed reasonable to me that they could hit that, and the only governor would be TSMC, which is the industry's governor.
Yeah, I mean, for what it's worth, we're modeling. I'm at 5 this year and 9 next year, and I think 11 in 2026. So it could be more.
You're safe. You're safe with 5. I think for sure.
We're at 5 right now for this year.
Absolutely. And with all the downstream FOMO from all the hyperscalers, it's going to happen. So it's interesting on embedded in gaming. I like to look at self-inflicted wounds and market-inflicted wounds.
Yeah.
And on gaming, I mean, it is absolutely a challenge, with the exception, I do believe there will be new consoles that will come out. We're in the 5th year of that. What's a mystery to me is our gaming, the gaming cards, where NVIDIA is an absolute juggernaut,
right? Yeah.
Juggernaut there. And embedded, listen, look at Altera, look at Lattice. They were all
over earning during COVID, and it's inventories. And look, auto and industrial markets in general right now are not great. Comm infrastructure is not great, and they were all over shipping and over earning. Like that. So there's a bunch you have to work off.
Exactly.
Again, it does look like it's bottom. At least they are looking for growth in the back half. Again, they were less. They're kind of suggesting single-digit sequential through the rest of the year. I think a quarter ago they were suggesting could be double-digit. Intel's still suggesting double-digit for Altera right now. Again, I think that's a mistake, but
yeah. Final comment that I have on this is that I think AMD needs to be looking very seriously of how they can capitalize on the Intel news. And it used to be with the OEMs that AMD was the risky choice, right?
Yeah.
And embedded in that is you throttle your volumes, and you throttle your volumes and the breadth of this. What AMD needs to really think through is how they can capitalize on this in areas like enterprise PCs and enterprise servers.
Yeah.
This is areas where they've been traditionally weak.
Yeah.
And that takes massive marketing and sales investments to get that going. But
they were, by the way, actually talking on the public call about like enterprise server gains, which I know they've been talking about forever.
Yes.
It sounded like they felt that they were a little more real now. And again, I think they said something like 1/3 of our new wins, which is not revenue yet, right? Takes time. They said something like 1/3 of our new wins are new enterprise customers that we've never sold to before. So I don't know how big that is, right? But they were talking about it like more than maybe they usually do.
Yeah, and what you'll do is you'll see that inside of numbers for like Dell and HPE and Lenovo. So hey, let's move on to the next topic. And just like we had talked about, this is not ARM and Lattice are not Stacy's. What do you call it? Official.
They're not under my coverage. We don't cover. A colleague of mine covers ARM, and we don't cover Lattice.
Perfect.
But I'm going to really hammer him, Pat. We're going to make him say something. He's not. I'm just joking.
Exactly. So hey, let's dive in here. I mean, they had a beat and a beat, which was great.
ARM, you mean?
Sorry, yeah. Moving into ARM, had a beat and a beat. It was a good conversation with Renee Haas, but the guide obviously fell short, even though ARM raised its guide $250
Yeah, well, they held the full year. That's the issue. So they got to beat the quarter, but they held the full year. So you're kind of implicitly taking the back half down, right? If you do that, maybe it's the other is you got to remember ARM trades at like 1,000 times price to forward, or whatever the number is, right?
Expectations based on the valuation are super high.
Yeah, I mean that one's always volatile.
So it's interesting. I think the licensing at 72% is like eye popping, but I got to tell you, I'm actually more impressed with the 17% royalty increases because it's so much more sticky. They have a product called CSS, which is essentially where ARM is doing more than giving you some soft macros that you can license, right? They're doing software validation. They're taking their IP all the way to the foundry, and they have about 50 different services they put in there. It's higher revenue. higher margin dollars, companies like AWS, Google, Microsoft with data center. So that to me is super impressive. V9, right? You're seeing, I think they went from 20% of licensing to 25%. Big boost. And by the way, higher margin. I think on the smartphone side, the licenses are double. I think I heard that correctly, which is good. They have about 75% less. 75% left to go, meaning there's still room there. Long term, it'll probably be less 50-50 royalty and license, probably be 60% royalty, 40% licensing, and an ongoing concern. That doesn't mean licensing will go down. It just means the company thinks that royalty will go up. Unclear the financial impact of these new ARM-based Windows PCs. We know the challenge or the lawsuits going between Qualcomm and ARM right now.
They didn't talk about that at all, I'm assuming, did they?
I don't know. They didn't. I don't even know how we would model something like that, because they are getting they are getting licensing out of that based on the Nuvia.
Yeah, no, the only thing I find hilarious there is, I mean, for ARM in general, it's important for them to be able to tell a story that is not smartphone based over time, right? And Qualcomm is one of the biggest proponents of using ARM in things that are not smartphones, and yet they're suing them. So like, I don't know, but
yeah, customers just want this whole thing to go away. My final comment on this, what's so interesting, ARM in terms of durability, it's not like you're gonna pull out, like if you're a licensee, it's not like you're going to completely pull out and go to RISC-V.
Yeah, it's the ecosystem isn't there. I mean, RISC-V is gaining traction. I mean, in
especially at the lower end embedded, where there's not a high level operating system.
Yeah.
Yes, absolutely.
But the ecosystem's not there, right? I mean,
net, huge valuation. People are looking for it, and they've kind of been bundled with this AI stocks. Like they're bundled in with the NVIDIAs, the AMDs, the Broadcoms, folks like that. So, the expectations are pretty high.
Yeah. I mean, look, by the way, y'all watching the market at all?
Yes.
Jesus. Wow. I didn't actually look for a while, and now I ran out of the screen to go vomit real quickly, and then I just quickly reminded myself that it's all paper anyway until you sell it. But yeah, it's brutal out there. ARM did fine. I mean, you guys hit it on a lot of it. I thought it was fine. I mean, you beat, and nowadays if you don't do the trifecta, you're just not going to get the pop. And they didn't do the trifecta. Like you said, they did raise last quarter. But people right now, this AI play, it's not about lean, mean, operating beats. It's about crushing. And if you're not crushing, everybody's just kind of like, it's it. But by the way, that's fundamentally baked into the fact that everybody out there that has half a brain knows the economy actually sucks. I'm just saying, like, the economy actually sucks. I've been saying this for a while, and it's not like my moment of victory, but I've been looking at these adjustments that have been made on jobs reports. I've been looking at the actual inflation in the market. I'm like, there's no way. This is such, and I know we've got to kind of dance the dance, but it's just not that good out there. So AI carries the day, and that's what it is. And so if your number isn't huge, if you don't have a great AI story, if you're not showing massive growth, and if you're not guiding up, you're going to just kind of get that blasé result. And Stacy, I think you said it well. I don't think it's 1,000. But I think across the kind of the semi, I know I'm joking, but across the semi space, I mean, ARM trades at just this remarkably high premium. And so that also leaves less latitude for anything less than amazing, because people, so I think in the end, though, they're executing, they're expanding, they've got these data center homegrown chips that they're building on. They're going to expand their footprint into AI. And even if they don't expand it meaningfully, as AI expands, you can't do it without CPUs. So they've got a benefit there. And no matter, which handset kind of ends up being the winner in the AI handsets, Apple or anyone else, there's ARM content. So there's just a lot of nice tailwinds, and they're raising prices, and they've been able to do that somewhat effectively. So all those things together, it's been a good shot. Sorry,
Turn it off.
All right, we just got the explicit rating on YouTube. So,
oh man, I'm sorry. I hope that the people that listen to our show are grown up enough that they can hear an F-bomb when the market's down 800 points in the morning. So off we roll.
Yeah, I mean it's crazy. You see, T-Mobile, Apple, and AMD are actually up. Everybody else is getting slaughtered. Intel's down 27%. I called 25%. Yesterday.
I've got a message.
That's where they were gonna end up. And again, I'm not the equities guy, but it was just it felt like there would be just a total meltdown, and we have a meltdown. Hey, let's pop into Lattice, Dan. You kicked
how much wealth do you think has been lost this morning? Like how much wealth has been wiped off the board? It's got to be like $1 trillion or something stupid like that, like this morning. So, well, actually, like you said, though, Pat G might be happy, like, because this is going to take the whole market's like, oh, we're down 25, but it would have only been like 15 on a good day.
It would have still been 25.
Hey, silver linings playbook here, buddy. So, Lattice has been, in transition, new leadership. Jim Anderson went over to Coherent. Now you got Assam leading the charge. We had the chance to speak to him on earnings day. They're still where they're still kind of in this position of digging out right now. The FPGA space was sort of interesting because it held a little bit longer. They were pretty well diversified in industrials and comm and PC and devices and data center. And so if you actually remember when other chip makers and memory all started tanking, Lattice had like 3 or 4 quarters that they kept going up. And it was like, wow, it was like 11, 12 record quarters in a row. Yeah. Well, those chickens have come home to roost. And I mean, the last 3 have been pretty rough. And, I'm looking for the good spots in the business. I think the best thing that I could say about their print was better than the other FPGA businesses right now.
Like Xilinx and Altera, AMD and Intel their FPGA businesses are pretty bad. They're
even worse.
The general trends are the same. It's
so,
by the way,
so
you can look at the other analogs, the guys that do industrial and auto. It's not great out there right now in those broader diversified markets.
It's not. By the way, when Qualcomm showed its big IoT number, I said to Cristiano, I said, I don't get it. I said, I don't see any data that's showing strength. And then he reminded me about the XR business, and I'm like, got it.
Consumer's actually not bad.
Yeah.
Like in PCs and smartphones and XR and tablets, those already collapsed, right?
Yeah.
So you've already hit bottom. We've had in general kind of an asynchronous kind of cycle.
Right.
Where the different end markets have been rolling over and bottoming at different times. So it has the effect of actually elongating the whole thing.
Yeah.
But depending on where you're exposed, you could have already seen it or it could be, still to come.
So with much of Lattice's stuff sitting in industrial, automotive, communications, they just have a lot of parts of their business that are down. And industrials has been tough. Comms has been, it's funny, you said T-Mobile's actually up, but comms, like the actual hardware comm space has been a mess for just a long time. And so, the overall space, Lattice, I think, is managing it well. They've been able to protect their margins, keeping it close to 70%. They're still delivering. But they had such a run up that on a year-over-year basis, it just looks terrible. And so, they're performing, they're operating, they're managing, they're expanding their TAM with their mid-range, their mid-range products. And overall, like I said, I think it's as good as they could do given circumstances. They're not a huge company. But in this case, maybe that's playing in their favor. They're in that space. They're focused on it.
Yeah, so. I mean, it's not anything that's specific to them. It's just again, the markets are weak and they overshipped, just like a lot of folks did. And so you have to work that off. It takes time.
Yeah, this I do the self-inflicted, market-inflicted, and absolutely market-inflicted. You compare, like you guys said, to Altera and AMD, and they're down less, and they have been down less. The thing that's really interesting here is that all of their business, 99% of it right now, are these lowest power, small FPGAs with small amount of LUTs, and they're doing now with Avant mid-range, which very small percent, super small percent right now. So it's all upside, and they're going after AMD and Altera with brand new designs in leading edge fabs. And by the way, FPGAs, we're not talking about 3 nanometer here, okay? And anything smaller than like 22 is small. And I think that's big. The other thing that I find interesting, it's not just about the hardware, is the attach rate on the software. I think the company said they have a 50% attach to their software, and that does two things. First of all, it drives revenue because it's an incremental cost, and second of all, it's stickiness. As we know, hello NVIDIA, write something directly to a piece of software, and you might be like, well, Pat, people don't dump FPGAs for ASICs at the low end. For the most part, you're right, but you give them less of a chance and motivation to do that by connecting the software. Last comment, all that software works together between the low end and the mid range. So I think the company has the potential for a very bright future. So with that said, Stacy, those are all of the chippery. You're more than welcome to stay. We can sling Microsoft and Amazon. What do you think, man?
I'd love to, but I actually have another call I got to get to.
Come on, Stacey, you don't have anything else to do but hang out with us. Don't lie. He's
I'd
got
I'll
a string of tweets about his dog he needs to put out, and he's got to get back after it.
I love that dog. Chippy is my little friend. I love him. So
he's sleeping over there on the floor. So.
I heard him barking earlier, though.
Yeah.
It's good to see you, Stacey. Thanks for playing. We'll have you back on the wheel of 6-5 fortune.
You bet. Anytime, just let me know. I'll be back.
Thanks, man. All right. That was fun, man. Stacy's great.
He is fun. He knows a lot. You know, it's rare there's someone that knows more than you. I'm not saying he does. I'm just saying it's rare that it happens.
No. Listen, we look at some things from different angles.
I do learn every time we go on. You want to hit Microsoft?
Yeah, let's jump in here. So listen, they cranked out a beat record bookings, cloud revenue 21%, Azure up 29%, below investor expectations. They got hammered on the AI capex that they were investing in, but it's like they kind of did a meta, and maybe they didn't do as well of a job doing the explanation. But I got to tell you, there's so many great things came out on that call related to AI, right? Azure AI customers using data and analytics up 50%, 14,000 paid Microsoft Fabric customers. And by the way, don't be confused. One of the biggest challenges out there with enterprise AI is getting your data estate. And Microsoft Fabric goes across multiple types of data sets, multiple types of data location. The other thing that came out, and I think Satya refers to these as green shoots, like you have a tree and then you see something new coming off of it that could turn into something big. GitHub Copilot, 76,000 companies, Copilot inside of GitHub up 180% year over year. And I like the way that the company is kind of taking a certain, I want to call it internal case study, external case study for a product line, and talking about how the meaningful nature of what it does for AI. Copilot for productivity up 60% quarter over quarter. And, huge companies like Capital Group, Disney, Dow, EY says they're going to bring Copilot to 150,000 of its employees. So listen, Microsoft really is in the catbird seat as it relates to enterprise AI, and I still think they have opportunity on consumer AI. They made the early bet with OpenAI, and it is interesting that OpenAI is now, I forget, it was the 8K or the 10K, they listed OpenAI as a competitor. But that just makes sense. I mean, that's the mature view of technology in this decade, which is co-opetition. Microsoft needs to work like heck to give more meaning inside of Windows. if I look at what Apple teed up with Apple AI and how embedded it was into the operating system, it's very impressive. And by the way, Apple AI is also in the Mac, and Microsoft just needs to keep plugging it away with case studies, customer case studies showing real payback from their tools. Final comment: I feel like Microsoft is getting serious for the first time on IaaS. Traditionally, I mean, since Azure's foundation, it seemed to be PaaS and SaaS, right? And SaaS is obviously stuff like Microsoft 65, D65, stuff like that. But I feel like the company is, for the first time, and they projected this for the last 6 months, is they're going toe to toe with AWS on generative AI IaaS.
So they've beaten every category except one, and it was the only one that anybody really seemed to care about this quarter, which was the cloud number. And by the way, they didn't miss by a lot. It was 29%. I think there was a target of like 30.5%. And so that was the really sticking point. The stock fell precipitously after they announced, but then it came back as Satya talked more. I think you hit a really good point on the 76 or so thousand in GitHub. What that says to me is there's a fundamental shift in how software is going to be developed going forward. And that's meaningful. That's meaningful in terms of how companies are going to build software and how they're going to hire. So as we go into this job deflation period of time and the increase in unemployment, that's an area where we were sort of told along the way it was going to be guaranteed, and it may not, in fact, be. Yeah. Not to say we won't need keep developers. We just may not need as many developers. The 60,000, I think it was 60,000 Azure open people building in Azure AI was another number I thought that was really important. I think the market this quarter there's been two big themes this quarter: CapEx spend and value out of AI. So companies are spending a ton. So this Microsoft number and the Amazon number and the Meta number, everybody was really, really looking hard and deep at CapEx spend. Funny, Meta, another earnings we didn't even talk about here. We didn't really talk about Apple or Meta, both doing better. Apple's actually up in a crazy day today, but Zuck actually came pretty much straight out and just said, we're going to be spending more. We just can't get behind. And the market loved it. I mean, they did have a great beat and a raise, and their advertising and core business are super stable.
Yeah. What was the difference there? Why was the reaction different, you think?
Well, I think one is they build their product for their own product. So if you look at the difference of all this CapEx investment in these cloud providers that are building product to enable others versus Meta, who's building AI to enable itself, it also seems to have the ability to do a lot of it on its own. It seems to be doing it somewhat efficiently. And of course, their margins are incredible. Their growth and their margins and their EPS. I mean, look at their EPS. It's like over $5 a share, if I recall, playing this by memory. I mean, they're just delivering. So this is not Meta Labs. This is not a bet on something they don't believe in. AI is going to be foundational to that company long term. So he said it. He explained it. People appreciated it. I think Satya was able to ease the market the same way through his comments on the earnings call. But people it's like they're in this tug of war: spend, don't spend. I came out and said, look, this is not cyclical. This is exponential. The ingestion / digestion / gestation period of AI is not finite. It's not fully understood. We don't know when value is going to be realized by every company. And sometimes you have to build factories. It certainly isn't building a new fab like what Intel is trying to do. I think there's a lot of reasons to be more bullish, but record results, record outcomes, growth, 29%, which by the way was substantially bigger than Amazon's growth. So both Google and Microsoft continue to gain share on AWS, despite law of large numbers, but that's meaningful too. So Pat, overall, I mean, it was a really good print. I just don't see, but the market's like, I said earlier, the market sucks. The market sucks. And so the volatility is skyrocketing.
Good analysis, Bestie. Hey, let's jump into our final symbol here, and that is Amazon, AMZN. Dan, what do you got?
Well, first of all, I mean, Amazon, it was a miss on revenue, narrow. I mean, God, terrible company. Only did 148 billion of revenue in a quarter. They were supposed to do 148.8, by the way. They beat on earnings, had a good earnings result. They beat on AWS. That was a good number because that was the number that, on Microsoft, everyone cared about. So you would have thought that might have kind of buoyed the company a little bit. But they had a little bit softer guidance, which again sort of fits the theme that we are heading into somewhat of a recessionary pressure. It's kind of interesting as the election comes now, all of a sudden, I thought we were supposed to hold this crap together until the election was over.
Exactly.
So I don't know how they're planning to do this, but maybe there's a rescue decision that's going to come and get everybody really excited. Pat, I'm going to prognosticate. Hold on. We're going to have a rate cut. We're going to have a rate cut now. It's going to happen. Rates are going to come down now. Jobs are imploding. The market's imploding. Like, okay, now can we cut rates? So that's going to happen if that's good. That means inflation. I don't know. We'll see what happens long term, but maybe we finally beat it to some extent. Just don't go to the grocery store or try to buy anything. Pat, two things, two notes, because I know we're running out of time. You got to get rolling. The cloud performance is good. AWS has a big mission ahead of it to prove it is not the third player in the public cloud for AI. That's it. That's the big mission the company has. And even notes there's rumors or some confirmed rumors of Andy asking what the heck happened. So Andy's basically, as I had speculated about the decision to move on from Adam, there was some contention about how the company handled its transition into AI. And the AI cloud has flipped the rankings, not the size of the businesses, just the rankings of the businesses. And AWS is pissed. Andy is pissed. That was his baby. He wants to see that company on top of AI. They have work to do. That's the area they have to prove. And so, by the way, it's something I think you and I will be digging into quite a bit over the next few quarters. Where will this kind of play out in the end? Because AWS has the infrastructure. They have SageMaker. They have Inferentia. They have Trainium. They have Titan. Just work to be done to prove they can keep customers on it for AI. Advertising missed, but advertising is now a $50 billion business for them. People don't think about them for that, but that's a massive revenue stream for the company. But again, did not grow fast enough. And Pat, I'll kind of wrap up by saying this: very sturdy, diversified business. Their retail business has actually seen its margins almost double. It's down a little bit quarter to quarter, but double from a year ago, which is a huge thing. They're making more money. They're delivering more profit, but yet from a value standpoint, they're kind of, from what I'm reading, and I need to assess this a little bit more, we're not the equities guy, but it looks like they're valued about where they were at 2020. So all the growth they've done for 4 years has not actually given any more value to the market, which is pretty interesting because to me, I think the company's improved its margins, diversified, and performed pretty darn well.
Yeah, great analysis there. I'm just going to add a little bit of color on your very astute comment about Amazon, AWS, and generative AI. And there's a holistic way to look at that, meaning how, and I think a lot of people are comparing the company to Microsoft that has both enterprise and consumer capabilities. Where is generative AI making more money for Amazon.com? The media businesses, their massive home electronics business with things like Alexa and Fire TV, and then of course AWS. And AWS has been a pioneer in so many things. I mean, they invented IaaS at scale, and they're used to creating markets and then staying ahead. I do believe that they got a little bit, I wouldn't say surprised. Of course, they knew about generative AI, but right now they are really, I think, need to be very loud and proud about its customers, the benefits that they're deriving from generative AI. And also being able to paint that company-wide picture. Because if you can't get, tons of customers to go on the record and talk about all the benefits, then, maybe get Amazon.com or get Panos on the devices side, talking about how Amazon generative AI is the best thing since sliced bread. I also think there's a lot of competition out there for homegrown silicon. AWS was the pioneer of that. We now have Google and Microsoft, who, by the way, for that matter, Meta, but they don't compete with Meta, building their own silicon. How does the performance look? We now have a competitive market, and I think measurements between, let's say Graviton and Maya would be interesting, or Trainium and Maya. Sorry, I meant Cobalt and Graviton. But anyways, you guys get the picture. It's a different market, and I think that Amazon would serve itself well, and I do think they're motivated, and I do think they're energized to get that message out. Dan,
Yeah.
any final comments on Amazon?
No, I was just saying, like, if we only knew of a lab that could do that kind of testing and then provide that kind of analysis to the market, anyone knows anyone, you should ring us up. Maybe tweet at Pat on social media and let him know. I personally believe, this week, last point, we got some attention around the TPU being used by Apple for training some of its LLMs, and that there's more of these flexible sort of accelerators that can be used for training inference purposes. And now we're basically seeing companies come out with specialty products. And of course, I guess, is this a conversation going to be a big thing over the next year, Pat? Because NVIDIA kind of had like this undisputed period. It was just like no one else is there, and then the only competition was going to be the other big flexible GPU from AMD. That was it. And then, of course, we're waiting for Intel's. And now we're starting to kind of hear, and well, are more people going to consider the route? Like, is TPU going to be an interesting alternative? It's just an interesting inflection, Pat. I think we'll have to get some of that stuff going in the lab, see how some of that stuff performs, and maybe we'll write some analysis on it. Of course, if we knew a lab.
We also knew a company that would do economic analysis too, to go cut across its customers. I think if you guys know of anybody who does that, let us know too. Hey, how about that? We started off with chips. We ended with chips. Dan, what a whirlwind. And we are 6 minutes over, which I think is pretty good for us because we did 7 topics and we had a special guest, Stacy. So just want to thank everybody for tuning in. Hopefully you were entertained and educated. Were you not entertained? I love that meme. One of my favorite top 10.
Are you not entertained?
Those guns are scaring me, man. This is why I keep the camera below my guns.
Sorry, it's all guns, no head.
I love that. Yeah, thanks for tuning in, everybody. We appreciate you. Dan, thanks. Good to see you. Hope to see you maybe this weekend. We can maybe break bread. We can come over, take some selfies.
Do it.